Hello everyone. Let's look at the self-employment tax. So as you know that the sole proprietors, they are responsible for collecting and remitting the payroll, employee payroll, and also the income taxes from their employees. But remember the sole proprietors, they are not employees and they also do not receive a salary from the business. Okay, the sole proprietors, they are self-employed, and so they need to pay the self-employment tax. Now, this self-employment tax is similar with the payroll tax. It's also used to support the two systems, the Social Security system and the Medicare system. All right, it's similar, but this one will be for the sole proprietors because they are not employed in any company. They are self-employed, so they have to pay also the payroll tax. We call it self-employment tax. So to find the self-employment tax, first of all, you will need to calculate the tax base. To find the tax base, you will take 92.35% times the net profit that you report on Schedule C, and then after that, you calculate the self-employment tax. So again, it has two parts. One is for the Social Security tax or Social Security system. It will be 12.4% of your earning up to 128,400. This is the base. And the Medicare will be 2.9% of all earning. Okay, and the self-employment tax normally is paid through estimated tax payment rather than through withholding. And as you know that we can deduct 50% of the self-employment tax on form 1040 from our for our AGI. Okay, it's part of the above the line deduction. So let's look at the example. This is the example from the book. Mr. Cards, a sole proprietorship, generated 225,000 net profit in 2018. If his marginal income tax rate was 37%, the after-tax income from the business was 140,512. Okay, so how to find that? So the Schedule C net profit, the profit from his business is 225,000. Okay, now let's calculate the self-employment tax. So first step, we need to calculate the tax base, which is 92.35% of the profit reported on Schedule C. So 92.35% of 225,000, and that will give you 207,788. And then you calculate the Social Security tax, which is 12.4% of earning up to 128,400. So because this self-earning tax base is more than 128,400, the maximum you time will be 128,400 times 12.4%, and that will give you 15,922. And then you calculate the medical tax, which is 2.9% times the tax base, remember, 207,788, that will give you 6,026. So you take the Social Security tax plus Medicare tax, and that will give you the self-employment tax as 21,948. Okay, so the answer for self-employment tax is 21,948. Now, if the question asks you, calculate the income tax, okay? How can we calculate the income tax? So first of all, we take the net profit, 225,000. Remember, we can deduct half of this self-employment tax as the above the line deduction. So we deduct half of that. That will give us 214,026. And we can also deduct 20% of the qualified business income. So 20% times 225,000, that'll give you 45,000. Okay. So the net profit subject to income tax will be 169,026. Suppose that the tax rate is 37,000, so you 37%. So you take 37% times this taxable income, and that will give you income tax of 62,540. So we take profit minus employment tax minus income tax, and so our after tax business income will be 140,512. Okay, that will be the after tax business income. But if the question asks you only self-employment tax, your answer will be 21,948. If the question asks you about the income tax, your answer will be 62,540. Okay, and if the question asks you what will be the after tax business income, then the answer will be 140,512. Okay, so remember again, to find the self-employment tax, first we need to find the tax base by taking 92.35% of the net profit reported on Schedule C. Then we find Social Security tax and Medicare tax, and we add them together, and that will be self-employment tax.